Thank you. Thank you. Thanks, everyone. Can you hear me okay? Happy Valentine's Day. Did anyone get any Valentines this morning?
Nope.
Yes? No? Oh, well, there's one hand at least. Anyway, at least my husband, he did remember to send me a text this morning. Anyway, thank you for coming to this session. You're very, very welcome. I'm Juliet, as introduced. I'm director, or one of the directors at FSD Africa. We're a specialist development agency that are really focused on strengthening the financial system so that it can drive that green transition that I think was a key focus of the previous session. And in particular, we're interested in leveraging one of the assets that was mentioned, which was Africa's entrepreneurial spirit and innovation, and driving finance to fuel the myriad of tech-led innovation that's going to be needed to help solve our climate and our biodiversity crisis. So that's why we partner with organizations like Catalyst Fund and Maelis. So Maelis, would you like to introduce yourself?
Thank you, Juliet. Indeed, we are a proud and very happy partner of FSD Africa. I'm Maelis. I'm the managing partner of the Catalyst Fund, which is a VC fund and accelerator focused on building a climate-resilient future in Africa. So we're very happy to come after the previous keynote, who already set the stage for us. And our goal is really to enable climate-positive growth, investing in very early-stage entrepreneurs, such as the likes of Octavia Carbon in this room that was mentioned before, and many others across climate adaptation sectors, so that we can enable communities to adapt to the impacts of climate change today, but also build a much more resilient future and stronger economies in the future.
Great. Thanks, Maelis. So we've got a very short amount of time. I'm going to ask a few questions of Maelis, and it's really drawing from some research that we partnered together on and we published in December last year, looking at the landscape of investing in climate tech across Africa. And we did that in partnership with ourselves, but also with UNIDO, with the Global Environmental Fund, and with JP Morgan. So we published it. We can give access to the data. It was really drawing from an extensive sample of deal flow data from Africa, the Big Deal, and also Catalyst Fund's own pipeline and portfolio and experience. And it used both AI and real-life people, subject matter experts, to analyze that data and come up with some really interesting insights. So I'm going to kick off, Maelis, just by asking from a sort of climate tech landscape sectoral perspective. I think one of the things that the report highlights is that there's a real over-representation of agriculture in terms of climate tech, the early stage pipeline that we're starting to see coming up. There's also a real significant amount of funding, 75%, going towards the water and the energy sectors. Perhaps you could say a bit more about why you think that's the case.
Absolutely, and let me also show you some data. So we actually, as Juliet said, as a VC, we review thousands of decks. I think just last year we reviewed about 3,000 decks from early stage startups building climate solutions. And my partner, Maxime, that many of you may know, runs Africa the Big Deal, the largest database of deals happening on the African continent across sectors. So blending those two, it was very interesting to see a few trends. So first, in our own pipeline, which is very early stage pre-seed, over 100 of the deals were in the agriculture space. And agriculture obviously represents between 20 and 40%, depending on the country, of GDP across Africa, and employs between 50 and 70% of the labor force. So clearly an extremely important sector, and one where we have to think about what are the models that are going to work at scale. So I think it's actually very encouraging that there's a lot of entrepreneurs thinking about new models, both from a product innovation, but also from a business model innovation in the agriculture space. And I think it's a positive sign. However, when we looked at the historical deals, 75% of funding to date has been captured by energy and water startups. Again, this reflects the enthusiasm by VCs and other investors in the past decade for energy, especially the solar energy sector that has really grown a lot, and also some water deals. Though again, this is less in the database. If we look at the number of the largest deals, there's 48 deals in the database over $10 million in Africa. A third of those are in energy. So clearly a lot of funding has gone to scale up solutions to date. And if you look actually at the exits, of the 10 exits that have happened in the climate space in the past decade, since 29, actually more than that, they're all in the energy space. So clearly, again, enthusiasm for this from investors, but I think things are starting to shift now. We're seeing much more diversity of business models.
Well, on that point, what other sectors do you think the investors should be looking at when they're thinking about investing in climate?
So from our perspective, one of the sectors, and we'll talk about this later, that has been receiving less funding is the adaptation, I guess, space, which has a lot of sectors underneath. So what we are very excited about is thinking of models in the climate insurance space, models in agriculture, in the blue economy, so aquaculture, fishery management, and way more waste management, or even access to water, or even sustainable building materials, and even healthcare, because actually there's a lot of correlation between health risks and climate risks. So how do we widen the lens when we think about climate? Because every sector of the economy will have to adapt to climate change.
Yeah. Okay. So just sort of thinking now about the funding landscape. I mean, the research that we did sort of actually highlighted that last year was a pretty good one for investing in climate tech, and of the flows that flew in to climate tech, about 1 out of every $3 went into climate tech. So that's pretty good, you know, in spite of the venture capital winter that we experienced and that we're familiar with. However, when you're sort of thinking about the broader perspective, the overall financing for climate and for adaptation in particular, the gap is still extremely deep. And maybe you could say something about that in relation to the research and your own experience as a fund manager.
Yeah, very true. Putting things into context, I think it's been a great year for the climate sector. It's exploding. There's no question that's the future we should all be thinking about if you're an investor or an entrepreneur in this room. And last year, it amassed nearly $1 billion in funding, actually coming out of a very strong 2022 as well. So when we look at the growth of the sector as a percentage of the total VC funding raised, last year it was at the 50% mark. And we've seen that the climate sector overall has experienced, amidst the funding winter, a much lesser, I guess, decline compared to, say, fintech or logistics, e-commerce, and other sectors, which was really hard hit. Which again is a reflection of the enthusiasm of investors, new funds getting set up in this space, and new entrepreneurs. But when we look globally, this is a global picture coming from the Climate Policy Initiative, it's true that still a lot of the funding goes to mitigation solution, and adaptation captures only 5% of global climate finance. And if we look at the Africa-specific situation, we're seeing that the total climate finance needed annually for Africa by 2030 to meet the goals is nearly $300 billion. And of that, the current level of annual climate finance going to Africa is $30 billion, so it's a huge gap, of which 11 is on adaptation, and only 3% comes from the private sector. So that number needs, no need to tell you this, but it needs to really increase massively for us to even arrive at the goals that are set.
Well, and I guess one of the ways of trying to improve that picture is, and something that the research really advocated for, is more Africa-centric financing models that are more patient, approaches that are hybrid, that bring together different forms of grant, equity, debt, and so on, together in more useful ways that are helping to meet that demand. And I just wonder if you can expand a little bit more on that point, again, from the research and your own experience.
Absolutely.
And how we can help to increase the flows of finance to help improve this picture here.
Yeah, absolutely. So how can we help increase the flows first? I think there's a very healthy discussion among investors and VCs in the space about what is the right model, the financing model that will work in Africa. And applying the Silicon Valley playbook, there's question around where that is the right approach. And I think it's a healthy debate, you know, and recognizing, especially in the climate space, we will need way more diversity in the pools of capital that support entrepreneurs. It could be debt, it could be concessional capital, it could be equity capital. And I'll come back to this point. When we want to attract more funding from investors, what we really need to do is three things. First, it's actually in the climate space, thinking about attracting the private sector. I mean, we have to bring up that number to 3%. And to do that, we need to think creatively about de-risking structures. So how do we enable the public and the private sector to better work together to attract more funding, and think about blended structures really at funds level, both in the debt space and the equity space. So that's a key priority. Second, how do we tell stories that make this exciting? There's so much opportunity in this space, and a lot of the climate narrative to date has been about doom and gloom, but it's not doom and gloom. It's the biggest opportunity of our century, and also there's no time to waste. So, reshaping the narrative around opportunity about the continent being a leader in climate action is really important, and highlighting those entrepreneurs who are growing, are having success, and will be able to scale their ventures. And finally, from an investor perspective, being less scared about hardware models and asset-heavy models, which you cannot avoid in the climate space. If you really want to make a dent, you can't just do asset light and software. The software will enhance the cost effectiveness of hardware sometimes, but the power is in the blending of technology and the blending of approaches. And we have, as investors, need to get way smarter about this, even venture capitalists. So that's, I think, a few ideas. But on your question on the pools of capital, to date, adaptation finance is already dispersed via a variety of instruments. And certainly equity is the least used, so debt is the biggest. And what we're seeing with our companies in the climate space, usually among other sectors, takes them 1 more year to raise financing. So it's typically 2 to 3, and in other sectors is 1 to 2 years. Why? Because there's a lot of R&D that usually happens in the early stage. So concessional capital is really important for that. How do we de-risk the innovation, the process of R&D? Second, debt. Actually, last year in Africa, you'll be surprised, but the ratio of debt versus equity really shifted. The companies on the continent raised a lot more debt. It's still very scarce, and we need to work on pricing. But that mix is something that entrepreneurs need to think about early on. How do I leverage debt for scale? How do I leverage concessional capital and then also equity to really take these ventures to the next level?
Okay, so one last question for you, Maelis. You've come with a lot of experience both in looking at the founder perspective and also looking at the funding perspective. What one piece of advice would you give to both aspiring entrepreneurs and founders, many of which might be here, as well as investors that are looking in this space?
Tricky question. I'd love to hear actually the audience thoughts on this. I'd say for investors, it's to keep an open mind. Yeah. When you think about climate, it doesn't all have to be agri or energy. There's a whole world out there in other sectors, and how do we really refine our climate lens in assessing founders, but then also in working with founders? How do we improve the business model so that climate risk is integrated and also we capture the climate opportunity? And for founders, I think it goes back to this question about financing. If you're out there seeking for funding, think early on about what's that trajectory going to look like, how long it's going to take you, what is the diversity in the pool of capitals that you're going to need at what point, what's most appropriate for you. Not every business needs to be a VC-backed business. There's many other instruments out there that are very helpful in scaling ventures. And so being really thoughtful about that continuum and mix is really key. And then second, thinking about your story from an exit potential. In the investor space, everyone is really asking about where the exit is going to come from, what's that path look like, and what we've seen in the data is that it's not going to be a one-size-fits-all story, right, across all these sectors. We're looking at M&A, we're looking at growth through venture over time. Perhaps there'll be IPOs as well, but thinking early about that path is also something that I would recommend to founders.
Great, thank you, Maelis. So that's it from us, and I think we're going to have a masterclass at 12 o'clock upstairs in the My Room, where we're going to dig a bit deeper into some of this data, and that's going to be both of us in partnership, but also Persistent, who is another partner of FSD Africa. So if you'd like to come along and dig a bit deeper into that data, then please join us for that masterclass at 12 o'clock.
Yeah.
Thanks so much.
Wonderful. Can we have a round of applause for... Now, Maelis and Juliet, before you step off the stage, may I ask a question? And also, if there's any other questions in the audience, please raise your hand quickly. We can take one quickly. In fact, actually, this was, yes, this was actually more questions for the audience, but I would love for you to elaborate as well. So did you catch what the number was for the investments on the continent for energy and water? It was a percentage that was prominently featured. I sometimes give out chocolates, so I promise to get one to you if I don't have one right now. Does anyone remember? Yes, in the back. Shout it out. Yes, 74%, which was quite interesting. Did you, maybe I didn't catch it, but did you have any ideas for, because there was other percentages listed, of course, for the other things where investments are going into. What can we do to get up the investments for things like you mentioned, like mitigation? Is there anything policy-wise, anything else you can think of that can increase that number, because it's very important?
Very good question. Lots of things, and I think actually our friends at CAPE are the forefront of that. I think, first of all, having a dialogue early about how to create a better enabling environment for this kind of innovation is really key, and thinking about that financing, as I was saying, that blending, how do we bring in the private sector, how do we think about carbon markets as well as an opportunity to monetize, that will require better policies, better support, and really stakeholders working together. I would say that's a really important factor.
Excellent.
But Julia, what do you think?
Excellent.
Yeah, no, I think so. Well, I think also just sort of recognizing that when we think about mitigation and adaptation and resilience, there are often components of all of them in everything. It's not an either or. And I think what we should also do is try and think about how can we build and increase on all components of that in specific solutions that we're investing in as well. What are the opportunities for these coexisting benefits across those three objectives?
Thank you so much for that presentation and for that answer. Once again, a round of applause for Juliet and Maelis, and then we will invite our next speakers onto the stage. Thank you.